Good morning and welcome. You're watching Market Cafe on ET Now. Ankita Saxena is with me and I am Harsh Saita. Let's quickly take you through all that's happening in global markets. So that's one piece, and then we'll take you through news, the global news and headlines, as well as Indian news and headlines. And lastly, we'll take you through individual stock-specific, announcements, results, all of it on this show. Let me quickly take it to Ankita. She always takes us through all that's happening in global markets. So Ankita, take us through that.
Good morning to you, Harsh. Now, US markets are finally rallying. I think investors are now hopeful that, there could be a potential slowdown in the interest rate hikes from the Federal Reserve. The Nasdaq Composite surged 2%, while the Dow Jones Industrial Average rose 554 points, and the S&P 500 added 1.1% in trade yesterday. Now, shares of Tesla and Apple gained on hopes that a reopening in China would boost their businesses. Now, remember, both these tech names have recently grappled with temporary shutdowns and blows to their production as the country dealt with surging COVID-19 cases. So now that's probably they're probably past that, and on the back of that, these two shares really added to the indices. European markets also closed higher yesterday after starting the new trading week on a rather uncertain note. The Pan-European Stock 600 closed up 0.5%, DAX closed up 0.4%, CSE was also up 0.5%, and FTSE closed up 0.1%, largely flat in trade. Now, Harsh, that was a roundup coming in from the US and the European markets. What does the crude look like?
Well, Ankita, crude looks like it's settling around that $82 a barrel mark, especially where the WTI prices are concerned. Brent around that $88 a barrel mark. And let's talk about a couple of things. One, we spoke about yesterday about the China reopening. Let me reiterate that. China reopening has come in quite well. So you are seeing good demand rise and pick up from China. The other piece, of course, is the US stocking. US has stocked up on a little bit of oil, and the third piece is the dollar index. The dollar index is ebbing. It's under pressure at the moment, and mind you, oil prices have an inverse relationship with the dollar index. So as the dollar index falls, oil prices go steadily higher, and that's exactly what we're seeing, at least at the moment. We're seeing oil as well as gold, just to add to it, see a steady pickup, and that's probably the result of why oil is where it is at the moment, but marginally higher versus yesterday as we see it at the moment. I'll quickly take it to Ankita, who generally takes the events to watch for the day. Ankita, talk to us about what to watch out for.
Right, Harsh, thank you. Now, there's quickly a couple of events lined up for today. First up is the US Manufacturing Composite PMI that's likely to come out today. We also have the Eurozone Manufacturing PMI that's due for today. And we are in the thick of earnings season globally and in India as well. So globally, we have Microsoft, we have General Electric, we have Johnson & Johnson, we have Texas Instruments, and we have Verizon coming out with the earnings, quarter 3 earnings today. And in India, we have HDFC, AMC, we have United Spirits, Pidilite Industries, Tata Coffee, Colgate, Sona, BLW, and TVS Motors that will be coming out with their quarter 3 earnings. We also have some corporate action happening there. We have PNB Housing that will be holding a board meeting on a round of funding, and so does Som Distilleries that will be talking about fundraising as of today. So these are the events that you need to watch out for in today's trading session. Over to you, Harsh.
Well, yes, let's quickly move on. Stocks, especially global. Microsoft announced a new multi-year, multi-billion-dollar investment with ChatGPT maker OpenAI. Currently, ChatGPT is just buzzing, right? Microsoft declined to provide a specific dollar amount, but media reports have pegged it at about $10 billion. The deal marks the third phase of the partnership between the two companies. Microsoft's investment will help the companies create new AI-powered experiences.
And some more news coming in on the layoffs. Spotify announced it's cutting 6% of its global workforce. The music streaming company contends with a gloomy economic environment that has seen consumers and advertisers limit their spendings. The cut will impact about 600 employees. Spotify sent an internal memo to staff announcing the layoffs.
Well, and Ford is jumping on board. Ford Motor Company plans to cut up to 3,200 jobs across Europe and move some product development work to the United States. The company wants to axe up to 2,500 jobs in product development and up to 700 in administrative roles, with German locations most affected.
And Apple is looking to manufacture 25% of all of its iPhones in India, according to the country's Commerce Minister Piyush Goyal. India's Minister of Commerce and Industry called Apple another success story for India. Last year, Apple began assembling its flagship iPhone 14 in India. Apple has been looking to diversify production away from China, where it currently makes the bulk of its iPhones.
Well, and shifting away from stock-specific news, two students were fatally shot at a charter school in Iowa. A wounded employee was listed as stable. All three of the potential suspects are in custody. The school is tailored for disadvantaged youths and has close ties to the police.
And Japan's finances are becoming increasingly dire, according to the country's finance minister Shunichi Suzuki. Japan's public debt is more than double its annual economic output, by far the heaviest burden in the industrialized world. The government has been helped by near-zero bond yields, but bond investors have recently sought to break the Bank of Japan's cap on the 10-year bond yield.
Well, and large parts of Pakistan have been left without power as the government's energy-saving measures backfired. The country suffered a huge power cut after a breakdown in its national grid, leaving millions without electricity. The power minister said that the grid failure followed a frequency variation in southern Pakistan. It is learned that electricity was turned off overnight to conserve fuel across the country, but technicians were unable to boot up the system in the morning. The country had earlier suffered a massive blackout in January 2021.
And with barely few days to go for the budget, there is a lot of buzz around what steps the government plans to take. Will this be a populist budget, as it is the last budget before an election year, or will the government focus on consolidation and maintaining fiscal prudence? Now, while we get the expectations by different sectors, let's take a quick look at the team that helps the finance minister put this exercise together. Here's a special report on the finance minister and her core team.
Her Bahi Khata decides the health of your wallet and of India's economy. All eyes are on her as Nirmala Sitharaman gets ready to present her fifth budget and the last full budget of Modi 2.0. Sitharaman steered the economy through 2 years of the coronavirus pandemic. And now the finance minister is expected to boost India's growth amidst a global economic slowdown. Not to mention, there will be pressure on Sitharaman to pander to voters ahead of general elections next year. Populist or not, there are two priorities before the finance minister: provide an impetus to growth and ensure fiscal consolidation. So who's helping Nirmala Sitharaman to balance these twin objectives? Well, ET now decided to take a closer look at her core team. V. Ananta Nageswaran, Chief Economic Advisor. A former academic and current Chief Economic Advisor, V. Ananta Nageswaran is steering the Economic Survey 2022-23, which will be tabled in the Parliament on January 31st. Nageswaran's budget footprint will be keenly watched for measures to kickstart private investment while maintaining macroeconomic balance. TV Somanathan, Finance Secretary. A budget veteran, TV Somanathan is a 1987 batch IAS officer. Now as a Finance Secretary, he's tasked with efforts to fuel capital expenditure. How he manages to that amidst global uncertainties will be interesting to watch. Ajay Seth, Economic Affairs Secretary. One of the most important members of the Finance Minister's team, Seth is in charge of the Budget Division, which collates data. His role in the budget will be keenly watched for growth impulses to support economic growth while maintaining macroeconomic stability. Tuhin Pandey, Secretary, Department of Investment and Public Asset Management, DIPAM. Pandey has been one of the most trusted officers in the Modi government, and he is credited for overseeing the Air India sale and the mega listing of LIC. Vivek Johari, Chairman CBIC. An IRS officer of the 1985 batch, Johari is a Special Secretary to the Government of India, besides being the Chairman of the Central Board of Indirect Taxes and Customs (CBIC), and has served in a number of roles in policy formation. His tenure as a member of GST saw many important changes carried out in the GST law and procedure. Nitin Gupta, Chairman CBDT. Gupta is the Chairman of Central Board of Direct Taxes (CBDT), the administrative body of the Income Tax Department. Vivek Joshi, Secretary Financial Services. A new face in the ministry which governs the banking sector, Joshi has worked as a Joint Secretary in the Department of Expenditure and looked after public procurement policies. Now he's expected to continue with the government's reform agenda for state-run financial institutions. Sanjay Malhotra, Revenue Secretary. Sanjay Malhotra has his task cut out. He will need to ensure tax relief and direct tax regime simplification amidst high inflation and to fund additional spending ahead of elections. It's now up to the Finance Minister Nirmala Sitharaman's core team to not only help the Indian economy navigate the global choppy waters, but also boost growth and investment while maintaining fiscal stability. With Sumita Karir and Gulshan Sharma, this is Sumit Lakhotia.
Well, absolutely. So look out next week. The top headline will be the budget. I'm focused on the budget at the moment.
Absolutely. All of us are, Harsh.
Yes. All eyes on Nirmala Sitharaman. But we'll quickly slip into a short break with that. More on the other side, of course. Well, we have a ton of primary market news, so welcome back. We're going to quickly take you through all of the action that we've missed out on since yesterday close. In primary market action, JSW Infrastructure is likely to go public soon. We believe the company plans to now raise 4,000 crore rupees, and promoters have no plans to sell their holding in the proposed issue. Anurag Joshi joins us with more details. Anurag, take us through that.
Infrastructure is planning, has set up a banking group to help arrange its proposed IPO of 4,000 crore rupees. And this will be the first initial public offering from the JSW group in 13 years since January 2010, when JSW Energy listed its shares. Now JSW Infrastructure has selected 5 banks to manage the IPO, and that includes JM Financial, which is the left lead key bank on the deal. And the key thing about this proposed IPO is that the shares being offered will be new shares to the investors, and the founders led by Sajan Jindal and his family are unlikely to sell their holdings to the in the IPOs.
And moving on to news from the ongoing investigation in the NSE co-location scam, SAT has set aside SEBI order against NSE in 2019 co-location matter. Now, it has also ordered NSE to pay 100 crore rupees as penalty. Let me bring in my colleague Anurag Joshi to fill in on all the details.
In a significant ruling, the Securities Appellate Tribunal, which is the appeal authority for market regulator, Securities and Exchange Board of India's orders, has set aside the SEBI order from 2019 in the co-location matter. SAT has quashed SEBI's order on NSE to disgorge 625 crore rupees along with a 12% rate of interest, and but it's ordered NSE to pay 100 crore rupees as a penalty. SAT has said that the SEBI order to disgorge the amount from NSE was unwarranted, and that the order of disgorging on NSE's former executives Ravi Narayan and Chitra Ramakrishnan was erroneous, and there's no finding to show that there was any wrongful gain on both of them from the co-location matter. Now, this co-location matter relates to more than a decade back, to 2010, when NSE allowed some brokers access to set up computer terminals next to its servers in its premises, which gave them a quicker opportunity to book trades compared to most other market participants, and which later SEBI said was discriminatory for the other, or for the other brokers, and it had passed this order in 2019.
Well, thanks for that, Anurag. We'll quickly move on. NARCL has emerged as the winner for acquiring 9,236 crore rupees worth of debt of JP Infra with a bid of 4,100 crore. ET now has learned from sources that the biggest beneficiary of the deal will be IDBI Bank, and it will get around 45% of recovery and reduce GNPAs by over 2% in the next quarter due to this NPA transfer. Ankur Mishra, my colleague, has more details on this one. Ankur.
Yes, NARCL has made first transfer with the account of JP Infratech. What we understand through sources is that IDBI Bank was a lead creditor for JP Infra, and the transfer has been made on last Friday, that is a week back. As far as the consideration are concerned, the total debt of JP Infra was over 10,000 crore, in which IDBI Bank was the lead creditor, and it has got a recovery of over 45% as far as the valuation is concerned. That means for now the bank will be receiving this much amount, and even if there is a recovery later, the bank will be recovering more amount later on. As far as the gross NPAs of banks are concerned, for IDBI Bank particularly, the GNPAs will come down more than 2.2% due to transfer of account of JP Infra, which has happened through NARCL, and overall other consortium lenders will also get benefited for that. Remember, there was a push from government for resolving 18 accounts through transfer of assets to NARCL, and this is happening now.
Well, all eyes are on the budget that's due next week now. But will the government axe the tax, or will there be an increase? The moment one mentions budget, the first thought on everyone's mind are the personal income tax slabs, including mine and Harsh's. Sources are telling a channel that this time around the government may raise the income tax exemption limits. This could mean higher IT exemption limit in old slabs as well. My colleague Prakash Priyadarshi filed this report earlier to take a closer look at the answer.
Yes, taxpayers may get relief from the union budget, which is going to be tabled on February 1st, 2023. Sources are informing that the government may announce some changes in new tax slab structure. The changes could be made to encourage taxpayers to adopt new tax slab structure going forward. As you are aware that under new tax slab structure, taxpayers may get relief in income tax rate without exemption. But as far as adoption rate is concerned, it is not as high as it was anticipated by the government. So making it more attractive, government is now mulling to provide some relief under new tax slab structure. Sources are also informing that government may announce enhancement in exemption limit on income, which is rupees 2.5 lakhs now. Also, income up to 20 lakhs may be brought in under 20% tax structure under new regime. As you are aware that the industry have made their representation to the finance ministry during pre-budget consultation to provide much needed relief to the consumer, to increase consumption in the country. It may also help industry to grow further on back of increased consumption and demand. So taking all into consideration, government is now mulling to provide some relief in new tax structure, and that could be announced in the budget.
Well, thanks for that, Prakash. That will hopefully come through and will prove to be a relief, at least for Ankita and myself, but and of course for you, the viewer. But we'll very quickly slip into a short break. More on the other side, of course. Welcome back. You're watching Market Cafe on ET Now. That part of the show where we take you through all the stocks that are in news, since last evening, and for that we're joined by Ashesha. Good morning, Ashesha. Take us through all the stocks that are in news and hopefully will buzz in markets today.
Absolutely. Hi, good morning. So Gland Pharma will be the first one in focus on the back of results that it reported post-market hours yesterday. Challenging business environment, supply chain disruptions led to production delays during the quarter, which impacted performance for the company. Revenue declined by nearly 12% on a year-on-year basis to come in at 940 crores. Margins, meanwhile, have also declined by nearly 210 basis points. Company reported margins of 30.9% versus 33% that the company had reported same time last year. India market for Gland Pharma witnessed sequential recovery of business due to normalization of insulin production line, and the company will be earmarking capital for further building in biosimilar CDMO facilities. So keep an eye out on Gland Pharma on the back of its results. Sterlite Technologies will also be in focus. Board of Directors yesterday informed the exchanges that they will be convening a meeting on the 27th of January to consider proposal of fundraising by way of equity shares or other securities through rights issue. Dilip Biltcon, the next one in focus, they have been declared as L1 bidder for the tender floated by Madhya Pradesh Jal Nigam, which is Madhya Pradesh government, for an order worth 1950 crore rupees. Its wholly owned subsidiary has already received the appointment date from NHAI. So on the back of this particular order win, Dilip Biltcon will also be in focus today. Moving on to Radico Khaitan then, where they have announced successful conversion of its 140 KLPD molasses plant at Rampur in dual feed. They have also marked successful completion of the first phase of its Sitapur Greenfield project. So on account of this, keep an eye out on Radico Khaitan. Lastly, Som Distilleries and Ease My Trip or Easy Trip Planners will be in focus because Easy Trip Planners will be considering proposal for acquisition in the meeting that is scheduled to happen today. Som Distilleries, meanwhile, will be considering fundraising plans, so keep an eye out on that one as well. Back to you.
Well, Shesha, just hang in there. You have all the brokerages that came in the morning. Do take us through what the brokerages are saying.
Absolutely. So first note has come in on L&T from Citi, where it has opened a 30-day upside catalyst watch on L&T with a target price of 2,630 rupees per share. They say this is due to expected healthy traction and order inflow that L&T witnessed in the last quarter. Quarter 3 results should also provide comfort as far as E&C margins are concerned. From medium term, L&T's valuation at about 24 times FY24 expected on core E&C business are attractive. This is what Citi believes. And they also see favorable capex cycle in India and healthy ordering in Middle East to support stock on the upside. They've given a target price of 2,630 on L&T. Meanwhile, CLSA has also come out with a note on M&M where they are maintaining their buy rating and they have increased their target price to 1,592 rupees per share. They say momentum across business segments for M&M continues to remain strong. SUV business is on a roll. They also say tractor business is on a solid footing in FY23. They have increased their volume estimates for M&M by 3 to 8% over the period FY23 to 25, and hence for now they are maintaining their buy rating on M&M with a target price of 1,592 rupees per share. Motilal Oswal has also come out with a note on Tata Consumer Products where they are maintaining their buy rating with a target price of 940 rupees per share. They say Nourishco is a good fit as far as Tata Consumer's acquisition is concerned. Tata's strategy to acquire the remaining stake in Nourishco from PepsiCo is bearing its fruit with the company. Exponential growth in distribution network will help the company gain market share going forward, and hence Motilal Oswal has for now maintained a buy rating with a target price of 940 rupees per share on Tata Consumer.
Well, thanks so much for that, Ashesha. We'll quickly move on. Axis Bank came out with its earnings and let me take you through all those numbers. Net interest income for Axis Bank came in 32.5% higher on a year-on-year basis, marginally higher than what I think the street was largely anticipating and our estimates as well. That led to a higher operating profit. Operating profit rose around 51% year-on-year. But provisioning came in slightly elevated as well. We were expecting something sub 1,000 crore. It came in at 1,400 odd crore. So that elevated provisioning is what has kept the PAT, or rather not really hit the PAT out of the park. PAT came in largely in line, 62% higher at 5,853 crore is where the PAT was. We're looking at NIMs though, which is the focus for the bank at the moment, moved up from 3.96% to 4.26%. So a healthy pickup that we've seen on the NIMs front. With regard to growth, nothing very impressive. Advances grew 14.5%+, obviously below. Why I say that it's not impressive is it's well below the system at the moment, and you're looking at deposit growth as well, sub 10%. So that's largely what's happening at Axis Bank. Let's quickly go in and listen to what the management had to say about the result.
We are seeing a broad-based growth in corporate loan demand. There is strong activity in segments like renewables, roads, chemicals, urban energy distribution, commercial real estate, and healthcare. Capacity expansion projects are picking up, especially in consumption-driven sectors. Pricing has seen improvement compared to what we were seeing 2 to 3 quarters back. We continue to choose opportunities that meet our return threshold. Third was around fostering a winning mindset. Like I mentioned earlier, Axis mobile app is the world's highest rated mobile banking app on the Play Store with a rating of 4.8. It has over 16 lakh reviews, which is the highest across 59 global banks, 8 global neobanks, and 50 Indian fintech apps. The app now handles over 65% of all service requests by volumes. We also retain our leadership position in rupee-denominated corporate bond issuances for the 16th consecutive year based on Bloomberg League table for India bonds.
Well, that was, of course, Amitabh Chaudhary of Axis Bank. And let's take you through what Brokerage is saying about the Axis Bank result. Morgan Stanley continues to maintain its overweight on Axis Bank. They've upped their target price, though, to 1,200 rupees a share. They believe that the PAT was 9% above Morgan Stanley estimates, and the beat was broadly all round. They believe that NIMS, fees and costs, all of those three surprised positively. Valuations currently at 1.8 times FY24 expected price to book look very attractive to Morgan Stanley, and overall loan growth also was strong according to them. 4% quarter on quarter is the number that they are looking at as quite strong. With regard to asset quality, they believe that it has come back to normalized and in fact is better than normalized levels, at least at the moment. JP Morgan also maintains its overweight on Axis Bank. They've given it a target price of 1,100 rupees a share. They believe that NIMs were primarily aided by rate hikes, of course. Loan growth at the moment, 15% year on year, they believe is reasonable, but still they believe is lower than large cap peers. They've raised their FY24 and FY25 EPS estimates by around 8% on the back of those higher NIMs, and they believe that Axis can sustain its current ROA profile given the levers that it has. So a couple of positive notes coming through for Axis Bank.
And moving on to another set of earnings that's due today, auto major Maruti Suzuki is set to declare its Q3 numbers as of today. The company's margins are expected to surpass the 9.5% after 2 years, and volumes are expected to increase on a year-on-year basis. My colleague Shrishti joins in with what to expect from the Maruti Suzuki results. Over to you, Shrishti.
Well, for Maruti Suzuki this time around, firstly, let's have a look at how the volumes played up in Q3 FY23. So the volumes were down on a sequential basis. They were down around 10%, but a good jump on a YOY basis. And that's exactly what we are expecting onto the number front, because all the headline numbers will show a growth on a YOY basis, but a decline on sequential basis is what we are expecting. Firstly, onto the top line, not just the volumes were down, there were chip shortages, but on the flip side, a richer product mix is something that will aid the numbers. And all in all, we are expecting a decline of 9.5% on the revenue front at 27,162 crores is our estimate. The EBITDA is expected to decline by 4.5% at 2,647 crores is our expectation. And let's talk about the margin front. We are expecting a number of 9.7%, and if the company reports a margin above 9.5%, that number you will see exactly after 2 years. A 40 bips expansion on a sequential basis is what we are expecting, purely on the back of the cool off in the RM cost inflation, and on the flip side, a lagged impact of the yen depreciation against INR. And lastly, let's talk about the profit figure. A drop of 9.5% on YOY basis is what we are expecting at 1,873 crores is our expectation. But barring the numbers, we'll also look out for the management commentary on the outlook on the sales figure. The latest sales number from Jimny and Frongs, because we are getting to know that 1,000 per day booking is what the company is getting for Jimny. So we'll have more clarity on that, and also onto the demand outlook is what we will be looking out from the management front.
Well, thanks for that, Srishti. And we'll stick to budget. Budget is just around the corner, 1 week to go. We are trying to, ease the jargons for you. Here's former Niti Aayog Vice Chair Rajiv Kumar explaining what capital expenditure really means.
Capital expenditure is that part of the expenditure which goes to create fixed assets in the economy. Now, for example, if the government is trying to create roads or bridges or buying equipment for the defense sector, those are part of the capital expenditure, which means that this is expenditure where the income will accrue over the period of years. Revenue expenditure is all that expenditure which is incurred on current consumption of the government, like salaries, pensions, or purchases by the government for its various supplies and procurement. So that's the difference. Revenue expenditure is the current expenditure, and capital expenditure is one where the incomes will accrue over the period of years. To give a household example, your monthly expenditure on food and ration and drinks, etc., is current expenditure. If you are building a house, that is capital expenditure. Similarly, in the case of the government.
Well, those were the budget basics for you. But with that, we're completely out of time on this show. Thank you so much for tuning in, but do stay tuned on for the market.